Good turnaround Tuesday, Warriors. Paul, Andrew, Michael, Sinatra, Alexander, team. Y'all doing okay? So, okay. So for turnaround Tuesday, this doesn't have a bad look. 1, 2, 3. Gotten a little red candle on a 4-hour. Look at where the RSI is on this. Could keep grinding and driving, but potential for the correction. So what have we had? Almost 400 points in the Dixie. So I don't know, just basic math. How about a pullback to 102, or near it from here? What do you think, Ryan? Am I crazy? Anyone here?
Well, I'm gonna say you're not crazy.
Okay.
Good morning. You know,
I thought when I didn't hear anything,
I actually joined about a minute after you started. Did you mention the divergence, RSI divergence on this last leg?
It has a nice look. Yeah. This could have been 1, 2, 3, and then your first red candle is kind of the go signal. And I did it, and I'm risking 50. I'm not gonna put my stop right over here in case there's another surge or two. And it looks like a better trade, but this is really the same trade, right? Yeah, higher low in cable, so EG still struggling.
The thing is with your Dixie, if it pulls back to 102, 102.50, something's changed, because it's trending. That would be for May. That would break the trend from early May, 102.50. Well, that would be about getting on for the 50 fib, something like that.
Halfway back. I mean, if this was the A, of this rally, or 1, you could have a 2, a 50% pullback's not unreasonable.
Yeah.
But you're right. But is the trend you're looking at this? It's a real sharp trend, Ryan.
Yeah.
I think I know what you're looking at. You're looking at this, right? Something like this.
Yeah, pretty much following the moving average you got there.
The other touches are here, but yeah. So just the 2 touches at the low. It's possible that's as deep as it gets. That'd be more bullish. I'm trying to think what else could light up risk. And anyone know why? I mean, it looks like you guys were all right. Just gonna sail through Congress, the debt ceiling. Is that what you're hearing?
It's looking that way. Obviously we've had every bottom politician coming out, the ones who say they'll vote for it, and we've heard more from the ones who said they won't vote for it because the press like that angle better. But you read between, you pick out the choice comments, and the Democrats are hoping. They were promised at least 150 Republican votes. That was part of the deal. So you've got to say there's at least that many Republicans going to vote. I don't know exactly how many is in that House, but 150 sounds a lot. The Democrats pretty much saying that they've got the votes. So you take all the naysayers, the ones who are apparently going to torpedo this deal, the rebels, if you like. Pinch of salt, but it's looking like it could pass. Obviously, never say never. I think if we do get confirmation of a pass, that's when we get our last leg, if you like, the last confirmation trading. So that could mean yields falling a bit further. We might see 10s dipping just below that 3.6%, maybe a bit more. Level. Yeah. And then we have to look at what happens after. If yields then find a bit of a bottom, it shows that perhaps we're switching back to everything else, the fundamentals, the data, the Fed and whatnot. and the debt ceiling stuff goes in the rearview mirror. But I think we need that final confirmation on the vote.
Yeah, 360 is that, it's a breakout. So
yeah. So if we get down there and find a bit of a bottom and can't break through that on a confirmation of the votes, then I think maybe that sets a bottom for yields, and we'll see what happens after that.
Buy bonds then, huh? Okay. I was talking about this a few days ago, and people are saying, well, Dale, that's so far away, but you know what? We're on our way. So I talked about this 2 drive here, and I was expecting one more shot down and clean out stops. But down here, I get interested in oil down here for a trade. So keep an eye on that one. And
that wasn't helped by the China data this morning.
Yeah, that's where risk off is about today, isn't it?
Yeah.
Stronger dollar, weaker S&Ps, China weakness.
Yeah, their manufacturing was expected to go into expansion, and it went further into contraction. So still a lot of work to be done there.
Hey, China's in trouble. China's in trouble, aren't they, guys? I mean, look at copper. I mean, it can't even bounce.
Well, that's the thing. And I was just going to mention, and good morning, everybody.
Hey,
good morning, Dale and Ryan. Ryan, I wanted to ask you guys, and from your points of view, I mean, China was supposed to be this great reopening. Obviously, it's fallen flat on its face, and it's scary that this, what we thought would be a force in global growth and recovery has, like I said, fallen flat on its face. What kind of
becomes a drag?
It is becoming a drag. So do you guys view it as being, is this going to be more deflationary for the world because China can't get things started? I mean, what are your thoughts there?
Yeah, it's twofold. You could say they've fallen flat on their face, but okay, just take the PMIs. Services came off a bit, but it's still, we're well in expansion, and it's the same story we've seen in many countries. Services doing well, manufacturing doing weak. So you could almost say there's a manufacturing recession on, which is going to hit your commodities and hit everything else, and services are going to carry economies. So when you look at it, China's going to be a big drag purely on the commodity side, which then feeds into global recession worries and so on and so forth. But on the other side, the services side, it's not looking too bad. So, one is a big global input, but the other isn't a global input, if I'm explaining myself clearly. But yes, if it is a bit deflationary if manufacturing is suffering, because then you're going to see commodities dropping, and commodities, energy, metals have been a big part of the inflation picture. So that dropping out, I mean, you've seen it today in Europe, the German regional CPIs dropping over, 100 percentage points.
I'm curious, and Dale, you've been at this longer than us.
Anyone
combined 10 times over. I'm just kidding, Dale. But Sonny, when we have disinflationary pressures, which obviously we're feeling right now, globally, do you think, and this is a question for all you guys, everybody that's listening, Steve, I know Steve's here, Stelios, love to hear you guys' views here. Do you think we'll get in a situation where we see deflationary pressures, not disinflationary pressures, but actually like where prices are retreating? I've never expected that, and I never have expected that. That hasn't been my base case, but I'm wondering, since we had such a massive swing in inflationary pressures, following COVID and all the monetary and fiscal stimulus that we got, it only made sense that we'd get the inflation that we got. But do you guys think that we will actually backtrack some of that and see deflation? Let's start with you, Dale. What do you think?
Yeah, I believe that we're headed towards a liquidity crisis. When you're in a liquidity crisis, you even sell the kitchen sink to raise cash. I rest my case.
Okay. What do you think, Stelios?
I think that, well, I've been saying for a while, right, that when inflation goes really high on a year-on-year basis, then it has to go low by mathematics only. And I don't think we're going to see deflation. I mean, it's tough. And why do I think that? Because I think that as soon as CPI, whatever the target measure is for each government, looks like it's heading towards target, they're gonna just put on the brakes on any tightening they're doing. So I think that, and maybe even before that, I think that as soon as the Fed sees, a 3 handle in inflation, they're gonna say, yeah, our job is done, the end. So I don't think central banks are gonna tighten enough for things to get really wild and start seeing deflation, which really we should be seeing deflation, not disinflation. We should be seeing negative. Yep.
Doesn't the Fed's policy lag a year? So, I mean,
does,
we're really probably only into what the economy is feeling now is early in the Fed's campaign, maybe a rate increase or two. And look at how weak things are now. So they don't have to do any more. They've already killed the patient. We just don't know, how long it's going to linger, but it's going to get worse. If the economy is not good now, China's slowing now, stocks like Deere and all copper stocks, everything, they're weak now. What's it going to be like a little bit further down the line in another 3, 4, or 5 months?
Yeah, I agree. It's a lagging effect. And actually, I hate to say it, but I think the Fed on the way down now in terms of inflation and on their trajectory to pause, I think they've done okay. The problem is they should have started hiking a lot earlier. But I think looking forward, which is what they do, what the Bank of England does, they all have like 1 or 2 year horizon and they try to gauge where inflation is going to be then. I think looking forward, they can understand that inflation is going to keep dropping. Will it go to, below 2%? I doubt it, but I think it's going to go towards their target. And that's why they're already showing signs that they might be stopping. Okay, maybe they do one more, but effectively they've stopped. So do I think we're going to see negative inflation? I don't think so, although we should to bring things back to normal, but I don't think we will.
What do you think,
Steve?
Good
point by Patrick. What difference does a rate make if you can't get credit?
Yeah.
And credit conditions are tightening. So it doesn't matter what the rate was.
So tight. Jim Welsh, Dale, your buddy Jim, he talks a lot about tight financial conditions, especially on for small businesses, a lot of these regional banks, and America is made up of predominantly small businesses. Yeah, I think people, especially not in the United States, tend to forget that. And you take some of these. I mean, we're just made up of all of these small, medium-sized businesses, and when they are searching for credit and they can't access credit facilities or credit facilities, that is not the proper way to describe it. They can't access cheap money anymore, and bridge loans, and they get cut off. It's going to be a really, really big strain on the U.S. economy in months ahead, as a lot of these notes come due and they have to refinance and try to get better rates. It just can't. So and right, Mike, they're cutting their credit lines. It's going to be really interesting the next few months, and I think people really overlook the part of that. Hey, we didn't hear from Steve. Steve, what do you think about Scuba Steve? What do you think about the sorry, I Big Daddy, stupid Adam Sandler movie in my head. Steve, what do you think about deflationary pressures in the U.S.?
What's that?
Scuba Steve?
What's that? Never could exist.
It sounds like something will never happen, like unicorns.
Yeah.
Yeah, I mean, what's that? When was the
last time?
It's
rare. It doesn't happen.
Deflation is a made up monster that nobody has seen in a century, at least in the US, roughly, with very few exceptions. Even in the depths of the Great Recession, I think we got something like a month of negative inflation, something like that. So it's a made-up monster to perpetuate the failed monetary policies that are made to perpetuate the spending bids from the fiscal side. Deflation is nothing bad. It would be extremely welcome if it ever came, but they're not going to allow anything like that to happen. Disinflationary periods, meaning periods that inflation is actually going down, not prices going down, just the rate of increase of prices going down, of course we're going to have. And when the next recession is here, probably disinflationary pressures are going to accelerate. Will that be enough to get to negative inflation? I think the chances are less than 1%. I hope so, but I think the chances are less than 1%.
I just want to add,
I was just going to say, I mean,
I'll take that, Bez.
It's hard to imagine that, but we also are living in a world where we are seeing things that we've never seen before either. So, you know, it's that's why it's like taking the other side of that. Like, Dale, I kind of agree. I mean, this is, if there's any time that we would see deflationary pressures emerge, it would be in a post-COVID pandemic world that none of us have ever lived through, right?
The thing is that you don't need some kind of a plan to manage that. For example, have I ever made a plan what's going to happen in case I win the lottery? No, I haven't made any plans.
What I did.
If I win the lottery, I'm going to handle that pleasant development then. So should I have a plan for handling something as pleasant as deflation? No. If it comes to that, I'm just going to enjoy it.
All right. Well, hey, you know, that's a great point of view. Hey, Dale, do you mind if I take the charts?
No, please. Yeah.
All right. Hey, you know, let's talk about, you know, some of these pressures. Actually, let's talk about what's happening in crude this morning. So crude oil is breaking down and crude. You know, I was thinking we might get some sort of rally here. That ain't happening. I was thinking this morning we get a little bit of a rally. I wasn't sure if we were going to visit the low 60s. So. I knew that staying below 74, $75, we were bearish. I mean, that if you read you know, my analysis on which I do the basic technical analysis throughout the week and the evening. So if you want to read like my updates here, you know, we're just talking about you know, move below 69 would expose a move to the $65 level. I mean, we've broken down pretty good here. Yeah. I just didn't think we'd revisit these levels. What do you think about crude here? I mean, what is that telling us right now?
I read a story that Russia's quitting OPEC, and that may be what's behind this sell-off here. That they don't want any restraints.
Okay.
So a guy named Michael Cow, I saw him write about.
I know.
Urban Cowboy.
Yeah, I know. K-O-A boy. Okay, yeah. Interesting. You know, yeah. So there you go. Just let Russia, you know, peel away and sell as much oil as they want, as often as they want, wherever they want, and yeah, I mean, crude prices could really take a tumble. Let's shift gears over
just before you switch, Blake, from crude. What's interesting is oil's continuing to fall. Yet dollar CAD can't crack this 136.50.
Yeah, you know, and we're waiting. We've got Canadian GDP numbers coming out, so let's talk a little bit about this. First of all, I wouldn't fade it, although we are up against a pretty big resistance zone, as you guys can see here. This is a bull flag pattern, and if that bull flag pattern completes, that will take us to the upper end of this triangle. Just so you guys can see this triangle consolidation, it's symmetrical for now, and it could be end up being a very elongated type of you know, triangle pennant development. But when you see what's happening with Norway, I mean, this is crazy, right? Look at the Norwegian krona. I mean, you know, I know Ryan, you were talking about this the other day. Stelios, I know you always have your eyes on Norway, But man, what a big move in
So
the US
that's
dollar
not a
Norwegian krone.
surprise. Technically, that was a break of two different cup and handle formations, a bigger one and a smaller one.
I know you'd say it's not a surprise technically, but the thing is it's actually breaking out pretty well, and following crude. So what's the hang up with the Canadian, Ryan? What do you think?
Just got this big level at 136.50. It's a level that goes back in time, and we keep knocking our head on it and not getting through. And even, as I say, even with oil continuing to fall, we can't get through. So it's a big solid level. I think if it breaks, then we're probably going to be 137 not long after, and maybe a look up at that trend line, top of the wedge, whatever you want to call it, 138, which is also a decent resistance area.
All right. Well, I think it has an opportunity today. Remember, we do have Canadian GDP in about 10 minutes. So we'll be following that via the data flash here. You can see all the data coming up. Stelios, you have any views about crude, Norway? I know you, like I said, your eyes have been on Norway quite a bit. The Canadian, thoughts here?
Yeah, well, I took a little shot a couple of days ago on Euro Norway short, very small and very tight stop, got stopped out pretty much straight away.
Yeah, me too.
Yeah,
good one, wasn't it?
We took that roughly at the same time with Ryan. It was coming up to resistance, and I said worth a shot. I mean, the fundamentals are insane at the moment for Norway, but I'm not really going to take any major risk on this until this move seems to be completing. Technically, like Steve said, don't want to touch it. Not at this level now. Now, crude, we have huge support around 64 to 65. Absolutely massive range support. So that has to hold. You see, there's three lows here. Nice chart. There's we go all the way back to March.
Yeah,
and actually there's another low in late 2022 and beyond, and late 2021, which is at roughly the same level. So this is a very, very important level or range here. So the oil is tricky because it's really under pressure because of China, because of the way the Chinese economy is not really restarting like the market has hoped for a while. And there's always the risk of a looming recession everywhere. CPI is dropping. It's as a global macroeconomic environment, it's not really great for oil. On the other hand, you have OPEC, which is standing ready to cut supply to do whatever they need. So what do I think about oil? I want to be a buyer on dips, but maybe I'll try this if we get down to the 64s. Maybe I'll try to buy, but really, again, I'm not going to do anything crazy. It's not going to be a hero trade because oil is a well-known widow maker.
I was just searching for this picture. I remember I looked at my Bloomberg screen, and when crude, this is as it was about ready to go break even, it's worth 42 cents, but it ended up dropping. I'm like, there's no way it's going negative.
Minus 37. Yeah.
Yeah. No way it's going negative. And I think I might've got a picture when it was, it was -6. And I'm like, there's no way it's going below that. And couldn't we bring back those days? Don't you remember this?
That was a pure play on it was a pure play on futures, though. It had nothing to do with actually
just a reminder.
I know, but it was
just a reminder.
crazy.
Not even that was enough to bring deflation.
True. Yeah.
Good point. Yeah. I mean, point well taken. So anyway, let's talk a little bit about this. Well, going back to Canada here. So here's the Canadian, nearing its highs of the day. I think 136.70 is going to be pretty big. We should probably talk about, this is the end of month. We got end of month flows that are happening right now. One of the things that's holding up, I think, the market in this very low liquidity environment that we're dealing with. Everybody's waiting on the debt ceiling, the votes, what's going to happen with. Now we are expected today for the the House to get through the debt ceiling vote, and then the real test is going to come with the Senate. Dale, do you think there's going to be a couple senators that throw a monkey wrench into this whole ordeal?
I thought it was going to be the House. So
really,
really, yeah, yeah.
Okay.
Who are the naysayers in the Senate?
I don't. First of all, I don't pay attention to people's names. I'm horrible at politicians' names. I hate I hate them all. I really do.
The Democrats have a majority in the Senate, so it looks like it's going to go through unless those Freedom Caucus guys can convince more than half of their party to vote no.
Yeah, there are a couple of naysayers out there. So, I mean, I think the market's going to wait till we get past these, before it gets signed on, the president's desk. Once he signs it, I think we'll be free to. It's like that old
sell any strength that day, Blake.
I will.
It is, or
100%. I will.
Think we have 4,300 in it.
I don't know if we're going to see, strength so much in equities. I'm expecting the dollar to spike, and then I'm going to sell into that strength. So I'm going to be looking at the US dollar, Japanese yen. I'm already short some, but I'll sell a spike here. If I can get a spike above 140, towards these highs, 141, 142, I'm a seller up there. I'm already starting to get myself into some yen longs. Meaning I'm going to play it on the short side, and I'm going to be aggressive below 138. So in other words, I'm telling you guys my whole plan. Everybody in the ForexAnalytix community already knows my whole plan. We discuss it every day, but on the morning edge. But that's all right. If you want to be part of the ForexAnalytix community, make sure you try it out. It's only $1 for 10 days, and you can come hang out with us, and we'll talk some of our private stuff there. But anyway, that's how I'm playing it. I don't know about the S&P. I don't know what I'm not so convinced about what we're gonna see here in the S&P. We're floundering around the 4,200 level. Channel resistance comes up around I don't know, 4,250 or so. What are you going to do here? I think we're held hostage right now by the NASDAQ. I mean, as long as the NASDAQ stays up at these levels, around these levels, it's hard to fade equity.
Like a blow off. Look at NVIDIA.
Yeah, NVIDIA actually
came off a little bit yesterday, but I mean, what a move.
It did. It hit the 127% extension and reversed like a bat out of hell with nice little gravestone doji. We're pre-market. We're going to gap down just a little bit, but we could leave an island top if we gap and crap, which is not common, but it can happen. Leaves all the bag holders up here at the 127% extension holding. Imagine owning NVIDIA at 400, and we start trading back below 300. Then you get everybody panicking. What?
Yeah, could happen.
Yeah, could. It definitely could. We got about 2 minutes till data. Steve, Stelios, Ryan, any last minute thoughts before we cover this? And I'll just say I'm going to put the Canadian yen up here too. Ryan, we'll start with you. Anything here?
No, not really. Keep an eye on this data. See if it's fairly hot. That might shift rate expectations for the Bank of Canada a tiny bit, but shouldn't do anything major. Jolts later on might be a bit more important for the US.
Use the CAD is testing. Once again, it's like the multiple time in several weeks. The confluence of resistance is at 136.50. That's the 61.8% fib of the move lower that we had this year. Also previous highs, previous lows. So weaker data should produce this breakout, and that should have follow through.
All right, thanks, Steve. Stelios, any last minute thoughts here?
Not really. I just want to say that when the debt ceiling is passed, I think wherever the S&P is, I think we're going to be rallying. We're going to be rallying. No, by S&P. I think wherever it is.
Okay. That's like buy silver? Is that
for a quick move? I'm not saying marry the position, but for a quick move, I think that's going to be a nice.
Yeah, so you're still gonna still stick with that buy stocks past the debt ceiling. You're really
for a short-term move, man.
He's only going out on one date with that trade.
I mean, he's like he loves buying stocks up here at lofty levels. It's a generational low today.
Strong data, by the way. Strong data.
What is it? Strong
data. 0.8% on the quarter versus flat expected. Annualized 3.1 versus 2.5 expected.
All right. Well,
it's not moving Canada.
Not really. I mean, you would think that data would have. I mean, I know it's backward looking and everything, so maybe the market says, "Yeah, screw you." I think it's going to be weak moving forward. So we'll see. It's not like
our guest isn't here.
Oh. That means
Forex guest hunter is
on the prowl.
I'm hunting him down.
All right. Well, while you're hunting him down, let's turn our attention to. All right, Steve. What other great ideas do you have for people today?
Today, I think.
How about marrying into money, Steve? What do you think?
I would advise against marrying with any criteria other than love is one of the elements. Another one is compatibility.
Good sex.
Compatibility with your partner is important.
I thought he was going to blurt that one out. So I did.
First of all, we've seen yesterday's dollar move in a big part reversing, right? I said since yesterday we need to be a little bit careful with declaring some kind of a top in the dollar. I mean, I do think that this dollar move is corrective, but that doesn't mean that it will end up at any given day, right? So I still see a lot of weakness in commodity currencies. Aussie, Kiwi have broken down several days ago and they're resuming to the downside. Euro USD failed at the attempt of breaking through the channel. So I think we should keep looking for more dollar strength until proven otherwise. And that affects everything, right? I know that metals today, despite that, are still a little bit higher on the day. Although they were higher than they are at the moment, but I think they are also not out of the woods yet. I think that crude oil is likely to attack 63.70 once again. I think more or less the correction higher is over. We had a triangle there. You have, from what I see, you've drawn part of the trend line support, Blake. So I think this is quite an impulsive move. So I do think that, and that's a good thing, obviously, that crude has more to go to the downside.
Deflationary pressures coming your way.
Yeah, I mean, hopefully we'll get inflation, cooling off a little bit more. Although I'm not super optimistic about how far we can go.
All right. Well, Dale, let us know when you win the lottery, Steve. Okay, we want to enjoy that moment with you.
And, Dale, looks like you found Dana.
Yes, Forex guest hunter.
All right,
successful.
So hey, before I let you guys go, hey, you guys want to check out the trader funding program? You should do it now, because if you want a great opportunity to not risk your own money, but risk our money, but you want to have a great opportunity with volatility to pass an assessment, volatility is bound to increase quite a bit over the course of the next week. We get past this debt ceiling situation, volatility, in my opinion, you're going to start to see VIX perk up way, well above 1920 again. You're going to start to see VIX come off of these really key levels. There's no better way to be able to, to have volatility, and be able to pass an assessment with higher volatility. So if we start seeing volatility, perk up back above 20, maybe get back towards this 200-day moving average, the ability to pass a trader an assessment is going to be much easier. So you just have to figure out what account size you want to try to qualify for, and check it out, because not only will you probably have higher volatility, you'll also be able to be included in the ForexAnalytix community. So you actually get to see, the trades that I'm taking, that other people are taking, like what Ryan's doing. You can see Ryan's, maps out his trades there. You can see when I take positions off the table, put them on. I put my whole board up there. Plus you have just the general community, S&Ps, just our community in general. So make sure you check it all out. Trader funding program. Dale, have a great interview. Ryan, Steve, Stelios. Thank you, guys.
Thanks, Stel, Ryan, Steve. Thank you, team.
Enjoy.
All right, Dana, buddy.
Dale, how you doing?
F.A.C.E. I'm doing fine. How about yourself? It's great to have you back.
Doing great, doing great.
So
my apologies. Like I said, Zoom decided to install an update right when I. Yeah. So that's how technology goes.
No problem. So, what do you think of this AI craze and this last move up in the market? Does it feel like a blow off?
It's a little bit. I think it's versus some of the blow-offs we've seen in the past. Certainly not as much. The difference is, I think, and our feeling has been this for the last year or so, is that we're in a bear market. So a blow off within a bear market, I don't think necessarily you're going to see, a run up like we saw in 2000, blow off to all-time highs necessarily. Although, when we think about the divergences we're seeing within the broader market versus the mega caps, I mean, this is one of the bigger bifurcations we've seen since then. If you look at, for example, I had a chart of the NASDAQ 100 up there, which has been going bonkers, but here's the value line. And, we like to look at the value line geometric. This tracks the median stock in the market. That doesn't look like a blow off to me. That doesn't even look like a bull market to me. So we're seeing, and our VR quantitative model, which relies heavily upon breadth, internal statistics, and that type of thing. We're still very concerned about this market because of that. We're not seeing the broad market rally. All we're seeing is, the tech stocks and the mega cap stocks moving. 100%. So
I mean, things like Deere and the real economy, and copper's been under pressure, and the yield curve, and maybe the Fed will go again. There's a lot to be concerned about. There is a wall of worry out there. When you look at even the S&Ps, that 4,200 level was supposed to be, such a clean breakout area, and we're trading on both sides of it for a few weeks now. I'm not that impressed. I know a lot of bears are looking for move to 4,300 as an area to probe shorts. You think we'll get there?
Yeah, I think it's a reasonable target. Obviously that's around the 61 retracement there, which and if you look at the S&P 500 in the short term, it's not an overwhelmingly bearish chart. You could see a little bit more upside in the longer term. Sure, we're still hitting lower highs. So and our overall feeling still and backed up by our models is that we're in a bear market, in a broader market. So this could move higher here in the short term. Differences, and you asked about the blow off, we don't think this is a sustainable move. So even though our model has been bearish for some time, doesn't mean you can't be long some things that are working, like tech and mega caps and the S&P even like this. But the difference is it's not backed up by the internals, which means it's unlikely to be a sustainable situation. So we've been long tech and the mega caps we've actually taken a lot of profits over the last 2 days. So we sold a lot of our position, have a huge cash position on right now. But even looking at the S&P 500 equal weight, it looks more like that value index than it does the the cap weighted S&P. So a lot to be concerned about from a internal and a broad market standpoint, which looking historically, when you have divergence like we're seeing right now, invariably the markets have gone the way of the broader market as opposed to the cap weighted index. The question is always, okay, when is it going to go that way? And I mentioned the 2000 example, which was the extreme, divergence that we've ever seen. So most stocks topped out actually in 98, and we're in a bear market until 2000, while the dot-commers went to new highs to 2000. I don't think we're going to see anything like Apple.
Yeah. Okay.
Correct.
Because at least we were in a bull market with a blow off. So you're saying the conditions of still being defined as a bear market, that these rallies are really great selling opportunities. Right. I'm interested in your take on TLT, because I know a lot of smart guys are getting bullish here because of they have their own reasons, but a few of them have been record net short positions in the bonds. Inflation coming down, economy slowing. All right, so there's your 10-year.
So we have the 10-year. Our thought is that the blow off in the COVID blow off was the bottom in yield for there's approximate 60-year cycle and interest rates. We think that was the low. So we think we go up for several decades to come in yield. So how high we get, I don't know. Maybe we approach those levels that we saw in the early 80s. Not sure, but we think we do go up for decades to come. Obviously, it's not going to be a straight line. You see big moves on the way down. Obviously, there's going to be ups and downs along the way. Right now, we are long the 10 and 30 year. We think we've got a shot at coming down in the 10-year towards that 280 level, and then in the 30-year, looking at the 3% level there before the next big low within this the long-term up move in yields, which, like I said, should be for decades to come. So if we get that 280 or the 3% the 30-year, I would go out and get a mortgage. And if you didn't lock one in, or if you're looking to move like we are, I would lock one in around there, and that might be the best we get for the rest of our lives, to be honest with you.
Yeah, maybe so maybe you'd get a 6.5 30 or 6.
Yeah, hopefully, maybe get a 5 handle. I don't know. We'll see, but it'll probably
make sure your mortgage broker doesn't get overages. All
right. I like I said, I wouldn't be surprised that that's the best we see though for the rest of our lifetime.
How about the dollar, Dana? We've had this nice little pop. Do you think there's more left in it? I know you pay attention to it.
And another theme, I guess, is that I think a lot of these markets are kind of in counter trend moves right now, like the bond market. We're seeing maybe a pullback here in yields within a larger move. Same thing with the dollar. We're seeing, I think overall, we're still confined to this downtrend for now, but in the short term, seeing a little bit of move higher, kind of counter trend rally. I don't think it's necessarily going to convince me that we're going higher unless we decisively get above like that 105, 106 level. So we've got no position. I think they will right now.
You know what that smells like a little bit? Yields dropping, like you're saying, and the dollar railing or having more in it. Risk off, it sounds like to me.
Yeah, for sure. And you're seeing that what you called maybe a blow off, or at least a kind of an ending type move in the Nasdaq and the tech type stocks, which would go along with that theme for sure.
Okay.
I can see that.
View on the miners.
Yeah, miners and the precious metals complex, same thing, same theme. I think this is a counter trend move lower.
Okay.
We trade ETF, so our view is this kind of a complex cup and handle we're seeing, after testing those 2011 highs here in GLD, kind of working that blow off move that we saw up into the COVID high. Now
Right.
we're 3 years into that. We've probably worked that off, storing up some energy for more of a sustainable breakout and a move higher, which should drag up the miners as well. The
Yeah.
problem is the miners are still equities. So if the equity market is in a rough spot, then that'll exert negative pressure on the miners, even if gold and to some
It's already
extent silver
started to
are
happen.
rallying. Yeah.
Especially in the silver miners,
Yes.
compared to what silver gave back. The silver miners like SILJ gave back a
Yeah.
lot more.
Yeah, for sure. This kind of last stand here, I think, for SILJ, like
Yeah.
you mentioned. If we can't hold this, obviously, we'll be testing those lows from last fall pretty soon. But we are long SILJ and GDX. We think, like I said, this
There's
is a
a
counter
trade.
trend move.
Yeah.
We do think there's upside, but obviously it's not without risk, and you gotta trade these things. Everything's kind of a trading market right now. So
Great
GDX,
point.
same thing.
So I knew I'd hear that from you. If there's one word people should write down and have on their desks right now, is be tactical.
Yes,
right?
For sure. Tactical, not just because we're in counter trend moves, but it's kind of
Consistent,
range bound. We're
Yeah.
very range bound in most of the markets we're looking at. You're not seeing anything screaming to new highs or new lows. So for sure, I'd be tactical, make trades, rent things instead of
Yeah.
own them, like they say, which is why, as I mentioned, we've got, one of our biggest cash positions that we've had in a long time. And
where do you keep the cash in 90-day bills?
no,
in this environment,
no, just in a money market, because we're always looking for opportunities, to redeploy, and it doesn't matter which market it is. There are always new opportunities that present themselves.
Yeah, it's a hassle. You'd have to break the bill to put on.
Yeah, we like to leave it. We like to leave things pretty liquid, because we have an idea that we're going to be like this for some time, but we never know. We got to try to follow the data.
Are you worried about the banks that do you think it's over? Because I look at the regional bank stocks, and they've had 2 drives, and it looks like there could be at least one more low. They haven't bottomed yet.
Well, if you look at here's the BKX. I mean,
see the 2 drives.
Yeah, for sure. I mean, does that look like it's over? I think this would be leading the way higher, right? If we're out of the woods. Same thing with, okay, we looked at the broader market. How about the micro caps? Does this look like we're out of the woods? I mean, it can't get off the ground here. So
sounds like money's going to liquidity, period.
Yeah, for sure.
So anything
you'll get the mega caps. Yeah.
Well,
our top. So XLG, the mega caps. I mean, obviously that's been the place to be long, along with techs, which is a big weighting here, obviously. But so that's it. Like I said, our models have been negative, but it doesn't mean you can't be long some things that are working. You stay hedged, keep a lot of cash. But
I'm trying to top pick Apple. What do you think?
Yeah, Apple's a tough one for us to trade. So we stick mostly to the ETFs as opposed to the single stocks. But
I thought maybe
Apple's a hard
your fund would come in and behind me support my position.
That's not going to move the needle, Dale.
Yeah, I know.
I would love to support you, but that ain't even a drop in the bucket. But Here's why obviously we took some
We're
profits.
61.8 back.
Yeah,
now.
right there. You know, so there are, like I said, there are, even in a rough environment in the broader sense, there are things that you can be long, but there are times there are spots to be long them, and there are spots to not chase. So we would certainly not be chasing here in XLG, and the same thing with NASDAQ 100 right there. So that's why we've taken a lot off the table in those trades right here. If we get a pullback, we can reassess, but it's been a nice trade for us, especially in an environment where our models are not bullish. So it's been nice to pick some up there, but certainly we would be pocketing some profits here. And like I said, it not necessarily going to be a sustainable up move. We think it's more of a counter trend move. And so you want to book some profits into those.
China markets look worse than ours though, don't they?
China looks suspect.
Yeah.
Not a big fan. We do, what is interesting is Japan again, you know.
Oh yeah, it went parabolic.
Yeah, it's had, you know, and I think you're on the same wavelength as I am when it comes to breakouts and breakdowns. In this in the modern day, though, they don't work like they used to, right? It used to be that you get a breakout, you could rely on it for some time. Right now, it's usually more of a fake out.
Yeah.
And if anything, you wait till it pulls back and test that breakout point. But we see the Nikkei at you know, what are we at, decade highs here? It doesn't mean you know, we don't find some resistance made up in the mid 30,000s, but or 32,000s. But strong looking chart. We've already had, you know, the long term, the secular bear market. We think we're in a secular bull market here, so buying the dips. But as with anything, it's always a matter of when and where. So, but Japan overall looks better to us. And another interesting looking chart is the hedged equity.
Do you think that's
Japan.
going to imply a stronger or weaker yen? Do you have a feeling on that?
Well, if you look at here's the hedged equity Japan, you know, it looks even better. So DXJ, it hedges away the yen, so that would imply a weaker yen. So I mentioned there's not much going to new highs or new lows. This is one exception. DXJ
markets love
moving to new highs. What's that?
They love weak currencies, markets.
Yeah, 100%. So you have to find ways to capitalize on that, either, you know, shorting the currency or finding instruments like this, which already has that embedded in it. So there are things out there, like I mentioned. That's why we don't. That's why we leave our cash liquid in case we do come across opportunities. And there are things out there like this. Another one that they were always asking me, where in the world would you go? Would you ever think you'd go to Argentina? Well, probably not, but I mean, yeah.
Here comes a weak currency, so its market exploded, right? Yeah, it looks pretty. Come on, baby. All right. Not seeing it, Jamie. Dana, are you there? Well, I think we lost Dana. Or was it me? Can you guys hear me?
No, I can hear you just fine. I think we did lose him, and
Okay. All right. Well, it was a great interview. We could still use it.
Oh, he just popped back in.
Hey, Dale.
Yeah, Dana.
Yeah. Okay. Got you.
All right.
I must have cut out there for a second.
Yeah. All right. So why don't you some real nice looks today. And you know, we went around the block on, you know, majors and things you're seeing. If people want to follow your work, best way for them to do so, Dana.
Yeah, so as we talked about, my our main business is managing money. Let's see here. How do I share? So we manage money. We also have a site for traders, do-it-yourself traders called the Lion's Share, where basically we share on a daily basis what we're looking at in our management business, and actually what trades we're actually making. So on a timely basis, so they can follow what we're buying, selling, shorting, that type of thing, and then they make the moves themselves. So the lionsharepro.com would be where you can find that. Actually have a sale going on this week.
You know, I lived in that building on the left side of that shop.
Yeah, you mentioned that, I think, in the past. The Marina
Newhart.
Towers, right?
Yeah, Bob Newhart and I lived in Marina City.
Oh, okay. My brother lived
you remember the Bob Newhart show, right?
Oh, yeah.
Oh, okay.
Great show.
Yeah, that's when I was a member at the Merc, when I thought I was a big shot.
Yeah. Well, we always, all of us Chicago folks spent some time down there at some point, right?
I was a legend in my own mind.
Yeah, we all were. We all were. You're still a legend though, Dale.
Yeah, I know what kind. Infamous. So
yeah. So you can find us there, and if you're interested, like I said, this would be a good week to join if you want to follow along. So
yeah. So Laura lives in Argentina. We have over 120% inflation for real. 8 to 10% monthly. People spend all their incomes because they won't be worth anything in the following months. What a tragedy.
It is. This is a disaster, and I hate to think about monetizing that, but you know, that's our job as money managers. But we'll keep them in our prayers as always, right, Dale?
Yeah, you know, Bobby Axelrod on Billions made his first big trade shorting airlines as a plane went into the building. You ever watch that?
I never. No, I've got 3 kids, so I don't have time to watch any television. I'm in front of my screen or on a baseball and softball field 24/7. So
all right, buddy. Dana, always great to catch up with you, buddy.
Yeah, appreciate it. Always a fun time. Great site, great interviews. I appreciate all the work that you do.
Thank you, Dana. Have a great summer. We'll get back in touch around in the summer.
Sounds great. Thanks, Dale.
All right.
Take care, everyone.
All right. Dana Lyons, everybody. And you can join the team in 18 minutes on the Morning Edge. Dana's really a good technician and has a great demeanor. So people are thanking you, Dana. You're welcome, everyone. Don't just count your pips, count your blessings. See you tomorrow. Good luck on Turnaround Tuesday.